Good morning, everyone. I'd like to start by thanking Yoel and the Tzevet of Kלכליסט. When KPMG were involved in most of the delegations on board, and it keeps on getting better and better. So, Yoel, well done. And you managed to get me on the panel, so well done for that as well. Why don't we start with a quick introduction of who's on the panel, kind of a 30-second quick intro.
I'm Rob Delaney. As you mentioned, I'm a vice president at Carrot Capital Partners. We're a growth equity firm based on both coasts. Most of our people are in San Francisco. I recently opened an office in New York. We focus on the enterprise, so we're looking for deep technology, and we're looking for companies that are ready to scale and sell to big enterprises here.
Hi, good afternoon. My name is Sivan Shamri Dahan. I'm a partner at Kumar Capital. We are a growth fund focused on late-stage investments at the fastest-growing Israeli startups, looking to invest in the best teams, best products, great market fit, and really take companies from sales revenues level of about 10 millions all the way to an IPO.
Hi, I'm Ken Bronfin. I am with Hearst Ventures. We are the corporate venture capital arm of the Hearst Corporation. Hearst Corporation is based here in New York, and we are a large family-owned business in both consumer media and in what we call business media, B2B services. We've been actively investing now for over 25 years. We're a Series A and Series B investor. We started here in the US, but we now have offices in China, in Europe, and of course in Israel. We try to leverage the resources of our 25,000 person company to build businesses. We're very active in what we do with all of our companies, and we're very enthusiastic about investing in the Israeli ecosystem.
Good, thank you. So it seems like every time I come to New York, I see more people walking around with shirts, T-shirts, everything saying, "I love New York." And that's a symbol to Israelis. There's so many Israelis in New York now. I think 400 startups, and the prediction is we're going to grow to 800 startups. So let's kickstart it with, the journey to New York, the journey to the US. What's your view? What are the fundamental for Israeli entrepreneurs or startup that really want to succeed and make it work in New York? What's the pitfalls and what's the fundamentals in this journey? Maybe Rob, can you?
I think the fundamentals start with, starting, right? Doing it, moving here. And I know there's probably would be some disagreement there, but as an American investor, we would love to see companies set up an office here for a number of reasons, right? And I think it starts with sales, right? Scaling starts with sales. I think you can develop the best technology in the world, but if you can't sell it, especially for the companies we invest into, large enterprises, you're going to have a challenge scaling. So really what we like to see from the start is developing a go-to-market presence in a place like New York and finding talented go-to-market people, which, by the way, for American companies is incredibly hard.
So I would say that, first of all, most of the Israeli startups today build themselves from very initial stages, develop the product, very focused on going into the US market. It wasn't the case, I think, only a few years ago, where sales processes were much longer, very much corporate, face-to-face, long and difficult processes, where Israelis felt much less natural in. And obviously the US startups that spoke the right American accent language, that had the right culture, playing golf with their customers, and had the large investments in sales and marketing, had a much bigger advantage. And today, the business models have changed completely. Many of the Israeli startups are selling their products and services on the SaaS model, many B2C. So really the entry barriers of going into the US market went down significantly, and more startups are selling their products to the US market from very initial stages. There are much better CEOs today with the capabilities and the ambitions to build large companies. And there's also the late stage funding that enables them to get there. And we encourage our CEOs to open their front offices here in New York or in San Francisco. Still, I would say that the main challenge is setting up a strong sales and marketing organization here in the US.
Okay.
Yeah, I agree with everything that's been said. I mean, just going back to even more basics, I think the fundamental issue that you start with is just making the move from Israel to the US. And this is a family issue because often wives and children don't come along in the first 6 months or a year. So you've got to deal with those type of issues. You have to deal with where am I going to live, who's going to provide various services to me. So I think having someone there to support you, someone in the United States who will be your colleague, so tie into the Israeli community here, where do I go eat for good Israeli food? What do I do? And so I think you have to get by that, and some people just ignore that, and it creates fundamental problems. And you're sitting here in New York worried about what your family is doing in Israel, so you have to get by that. But then, I mean, just going along with what everyone has said, I think building that team is the most important part of getting started here, of course. And you don't have a network here. You don't know how to necessarily hire, American talent. You don't know how to evaluate it, and so on. And a lot of Israelis come here with a good understanding of how to hire tech talent, but much less of an understanding of hire good sales and marketing talent. And not being part of the network, it's very difficult. So that's the fundamental issue that I see all these entrepreneurs face. And once again, having a good group of people to work with here, and even having a U.S. venture capital investor to be part of it, to work with you, I think is critically important.
Okay, thanks. Yeah, one of the US VCs that I spoke to asked me to give this, recommendation to Israeli entrepreneurs. When you come to a meeting, on time is late. Come 5 minutes before. Don't come on time or 5 minutes later. So that's another thing to remember on the journey. Right, another question. As Israeli entrepreneurs are looking at the US, do you think it's wise for them to take money early on from US VCs rather than Israeli VCs? And I hope we find some contradiction in the answer here. So, if your market's in the US and you can take money very early on from a US VC, which will help you penetrate the market, can you skip the Israeli VCs?
I think that you should have a good combination of both US and Israeli VCs. Definitely in earlier stages, it's good to have the venture capital sits next to you and help you in the initial stages. We see the US VCs coming in usually at the B round where it's the right time to start opening doors to the US market. And then in the late stage, we strengthen the board with additional capacity of helping the founders strategically and locally thinking together about the next levels of scale.
Yeah, I mean, clearly, most of these businesses will still be in two countries, U.S. and in Israel. So I think it's very, very productive to have venture capitalists, investors on both sides. I think the ideal scenario, I'm not trying to pitch what we do, but we have an office here, we have an office in Israel, and we work seamlessly to support our companies no matter where they are. And we often both sit on boards, my representative there and me, to support companies. So the ideal scenario is to have it all tied together, but if you can't find that, having investors on both sides of the ocean, I think, is very, very useful.
Yeah, I mean, I think there's tremendous value in diversity of investors, right? I mean, there's strengths that American investors have and Israeli investors have. I think the Israeli investors will institute more discipline in the companies from an early stage. The American investors probably more willing to go long, on the vision. So there's value in having both. I would say that you don't need to have both, right? There's tremendous interest from American investors at the seed stage. I was meeting with a big venture capital firm recently who only focuses on cybersecurity, and they said 40% of the seed deals they look at are in Israel. So, it's to the point where you don't need both. But I think if you find the right ones, there's value in it.
Okay, can't get you to disagree. Disappointing. We'll try again. Looking at the IPO market. So we've seen Uber file today, Lyft filed a few days ago in Israel to Fin. So there's a good backlog of a pipeline of IPOs. Is it going to be a strong year? First question, for Israeli companies and in the US. Second of all, when you make investments, is it usually the traditional M&A exit, or are you looking at IPO, and if you can't see the IPO, would you not invest? Sivan.
Yeah, sure. So first of all, these are really exciting times. And as a late-stage investor, when we invest in a company, we want to see a dual track. So we want to see the companies definitely being able to get to an IPO in NASDAQ. And obviously, in many of the cases, this will end up in M&A. When we first established Kumra, that was 5 years ago, actually, no one believed that there's going to be such a large late-stage market in Israel, with only $200 million being invested in late stage at that time, 2018. So $2.1 billion going into late stage. And I can tell you from our records that there are more than 250 companies today that are growth Israeli late-stage companies, and more than 40 will be IPO-able over the next 18 months. So we see the market growing. We see companies scaling organically, but both inorganically, actually, buying startups that are smaller. And I think that 2019 is going to be a significant year in terms of IPOs, both US and Israeli. And hopefully this will give appetite and pave the way for other startups to target NASDAQ and really building themselves towards being market leaders.
Well, I'd love to find some disagreement. I'm not sure that there is. But clearly, not all companies are cut out to be public companies. Some of them just don't need to be public. Some of them will be very successful growing on their own. Some of them will have extreme success through an acquisition. So I don't think all companies need to plan for an IPO, and there's a lot of companies that will find great prospects as an acquisition. And of course, I sit here as a employee of a 132-year-old company that's been private for the whole time, and I got to tell you, that's an incredible luxury not to be public. So while I sit around encouraging some companies to be public, I know the cost of being public, not just the financial cost, but all the worries and cumbersome restrictions that go along with it. So not all companies need to go public, and some are perfectly fine as merger targets or acquisition targets, and I believe in that. Who knows about the IPO market? If someone really has a vision on that, I'd love to hear, because these are fragile markets. These windows open and close. I've taken a bunch of companies public, and I can tell you, even 2 days before the IPO, we've had our bankers saying, well, if Donald Trump were to tweet X, Y, and Z, we're calling this off. I mean, it's so fragile. So I can't predict. I don't know if anyone can truly predict what the markets look like. So far, so good. Lyft came out, kind of mixed, not too exciting. Hopefully these others will do better. And clearly there are a few companies that I can think of in Israel that are bound for an IPO, and I wish them all the luck in the world to get there.
So I disagree a little bit on the IPO point. I think,
yes.
There you go, John.
Okay, you got what you wanted.
So I think there's a little bit of an availability bias when we talk about IPOs, right? There's the big names. I mean, there's Uber, there's Lyft. You know, in Israel, there's Get, Fiverr, Tufin. But that's really not representative of, I think, of the majority of companies that are invested in. You know, and so when we invest, you know, IPO is rarely something we would think about. We're actually more looking strategically, who would this be attractive to buy, or who would this be an attractive acquisition target for down the line? And I think there's a number of reasons for that. You know, most notably, I think there's still going to be a ton of private capital out there, right? So the options, you know, usually I think are going to be better to stay private. I mean, you look at Uber and Lyft, I'm not sure exactly how old they are, but 15 years old, 12 years old, whatever they are. So from our perspective, and by the way, the Israeli IPO market, while there's a lot of hype about this year, has been pretty weak for the last 3 years. And so, and you know, I think it was a great point, right? The IPO markets are really hard to predict, right? And there's sort of animal spirits out there. So we typically look at who would buy this company if it's scaled, and that's how we think about it.
Okay, we're going to rush because we don't have time. So just corporate M&A. So we've seen McDonald's do a strategic. Two more questions. We've seen McDonald's do a strategic acquisition. Are we going to see other corporates who are not the, you know, acqui-hire buying technology, actually strategic acquisitions? Any sectors that you think are going to be interesting?
I would say, first of all, maybe.
Okay.
We're not sure. And definitely the McDonald's acquisition of Dynamic Yield, it was great, but it was not the typical one. And we should definitely not plan and build on this kind of M&As for our portfolio companies. Traditional corporate buyers such as Microsoft and Google, Amazon, IBM, Intel, Salesforce, who made a great acquisition of Datramo in Israel. These are the players that will continue buying Israeli tech companies. They all have big centers in Israel, are looking for acquisitions, and maybe the Walmarts and Unilevers of the world will make a one-off deal in Israel, but this is definitely not the usual type of acquisition that we'll be looking for.
Okay, so one last question. Cap tables. So every US VC you speak to, when they look at an Israeli entrepreneurial company, they say horrible cap table.
Disaster.
Disaster. What are the entrepreneurs in the US doing differently?
I think there's a few things. I think the American VCs put forth just cleaner terms. I think some of it's over-engineered in Israel. And there's also just, every time I look at a cap table, there's just all these entrepreneurs who are investing, friends and family. And so I think there's just a little bit more of a robust institutional infrastructure in the US about, okay, this is what you put forth in an early stage deal. We're going to get institutional capital. It probably also has to do with the type of capital that's out there. But you're right. I mean, every time I look at an Israeli company's cap table and they're still at the early stage, it's like, how many names? How could you possibly have this many names on the cap table?
It's family and friends. It's a big family. Big family. Okay, so we have to finish. I'll just end up with a short story, which I was in the Silicon Valley a few weeks ago, and I was driving back going to the airport, and I saw this farm. And I went in the farm, I'm seeing these weird creatures running around, and I asked the farmer, what's going on? He said, look, we're in the Silicon Valley, we've put a lot of money in R&D, we raise chickens here, but we've done some R&D, and we see that people like to eat the pulke, the drumsticks of the chicken, so we've produced a chicken with 8 legs. And I said to him, bloody hell, that's amazing, you must be making millions. He said, we're losing money. I said, how can that be? He said, we can't catch them. Right, so thank you all.